Everyday life issues broken down to help you build your own opinions on the issues that matter most. Coming to you from Austin, Texas, this is The Deciding Factor with your host, Alton Hill and John Herzog.
Hey, everybody. I'm Alton Hill with my buddy John over here. And today we're going to be talking a little bit about the stock market. Should we invest? Should we not? How much money has Alton lost in the market? So figuring out about the stock market, and the goal, I think, for me today is to just share a little bit of my experience. Definitely not a black belt stock market trader, but I've maybe done enough trading and made enough mistakes that, if you listen in, you can probably save yourself some money. I don't know. This may be our most valuable podcast yet. I mean, I've lost thousands. So, I mean, if you can just pick up a couple of things from our conversation today, then maybe you can avoid that heartache.
Or if you're like me and you're only investing $10 at a time, then you're only making pennies, or you're losing pennies, right?
Well, yeah. I mean, it's a percentage game.
This is
percentage gain. I mean, 10% is 10%. Just have to find more money.
Oh man. So I'm actually kind of excited though. So we've been talking about all sorts of things: business, stocks, college. We both on and off air, and part of this whole conversation has involved the economy some way. So I got furloughed due to COVID. And then today, right before we got on air, I actually got a message from a possible job. So I'm psyched. I'm one of those 30 million right now that are unemployed, and I'm eager to get something lined up because I don't like stressing over this. But I just started playing with stocks on the side just to see if this is something else that while I'm working, am I going to be able to make something on the side?
Yeah.
So I'm interested about this topic. I'm nowhere near, I'm a beginner of a beginner. So, I mean, I've been watching some YouTube videos. I've been talking with you, and man, I'm interested, very interested. So I guess I'd like to ask you, starting out, what would you say a go-to strategy going on might be?
Like just
starting
straight out?
Yeah, because so when I was looking into it, man, there's options. There's just buying regular stocks. That as you spill your drink all over yourself.
Just up my nose, not all over me. Come on.
And then I saw something earlier today. It is it exchanges or funding? I don't remember, but there was something else.
Oh, like ETFs?
Yes.
Yeah.
I mean, I've been watching hours worth of stock videos.
Yeah, it's good on YouTube that you can put them on like 1.5x so you can really accelerate.
There's so much to it.
Yeah.
And then I ran across a video and it was like, there's all these strategies.
For sure.
Different strategies. I mean, just between the puts and the calls, which I'll let you explain in a little bit. There were several different strategies just between those two options. And it was like, oh my goodness.
Yeah.
I think you need a college degree just to do that.
Well, it's true, right? That and this is, truth coming from me, I thought that I could just jump in there, right? And so I think I've mentioned that I train jiu-jitsu, and so I very much feel like I'm a white belt in trading, that I've got a couple of good moves, to whereas, I remember this time, I had just barely trained a little bit of jiu-jitsu, been a white belt for maybe 8 months, 10 months, a year at the most. And this big guy.
So the blue belts were picking on you still.
Everybody's, I'm a little guy, right? Like 155 pounds, 160 pounds if I'm, feeling fat that day. And Like generally, a guy's going to be bigger than me, right? So jiu-jitsu is good if you know a couple techniques. Well, I was actually playing basketball, and this guy who's bigger than me, he just starts running his mouth, and like kind of getting physical. You know, I mean, basketball in the street, you can get a little rough, and so he starts running his mouth and made some threats, and so essentially, I just kind of got behind him real quick and put him in a chokehold, and he kind of tripped and we fell over. And I was like, man, can you just chill out? And I wasn't choking him. I was just holding him. Right. Really? And he's a bigger guy than me, probably outweighed me by 40 or 50 pounds. Rear naked choke is probably, other than the arm bar, it's like the move in jiu-jitsu. I mean, there's way more. Right?
Oh, yeah.
But the arm bar and rear naked chokes is very straightforward. Even, you know, these are the ones that I'm teaching my kids. They're the most simple, most well-known. And anyway, I made the guy tap because he was all mad. And I was like, you just need to like give up, right? And you're talking all this trash. Look, the little guy is choking you out. So back to the stocks. If you know some good techniques, you don't have to be a master. Right? The black belts you call professor in jiu-jitsu.
Right.
It's because they've dedicated the, you know, decade or whatever, right, to learning the craft. And so they've earned that professor title. Well, you don't have to be a professor to win some matches, right? So I think when you talk about all the strategies and all the super cool stuff, for me, coming from the martial arts background, is like learn a couple techniques that fit in your realm of comfort zone, right? What are your goals? And for some people in the market, it's more of a long-term strategy. Like, I just want to grow wealth over the long term, right? Some people are more conservative and some people are more aggressive, right? Typically, if you're younger, they say you can be more aggressive than if you're older. But for me, when I first started investing, I was just, somebody told me you could make money in stock market. So I just threw it in there.
But there's also a lot of
no strategy is what I'm saying, right? It's like,
but there's also a lot of misleading videos on YouTube where they're like, oh, I make, you know, $10,000 in only 30 minutes.
Well, it's certainly true, but at what cost, right? Did they mortgage their house for that? Are they trading on margin, right? So if you put money into E-Trade, right? You set up an account on E-Trade, depending on the account and everything, they'll let you trade on margin, which, you know,
borrowed
4x, right? So if I have $1,000 in there, then I can buy $4,000 in stock.
Margins meaning borrowed money.
Right. It's like credit. You're taking a loan out to buy. Well, if you're really good and you know what you're doing, if I could buy $4,000, you know, instead of 1,000, then I can make 4x. But that also means, guess what? I can lose 4x. Well, I didn't have 4x to start, you know, or 4 times the money, not 4x, because you can trade 4x too, which is not the number 4x. It's something totally different. But so where do I start? You need to start by knowing what you want to get out of it. Is this, you want income every so often, or is this kind of like a savings alternative? Or
well, okay,
what are you trying to do?
So, okay, when
it's like, which move should I use in a fight? Well,
so for me, you know, the first thing that came to my mind was, is this something that I can make money really quick, really fast? I can make a living right off the bat. What's the reality?
So I think that it's possible, but it's going to take some hard work to understand what you're doing. I don't think that, I mean, anybody can get lucky, right? But you want to stack the odds in your favor. And so if you just kind of look up stock trading on YouTube, there's definitely the strategy side of it. But if you go follow some trading tip Instagram accounts or whatever, like half of them will be, here is a naked put strategy or how you can use it. Okay. And then the next post will be, how do you handle the emotional turmoil of like losing X amount from your account in a day? Right. So if you want to be able to make 10,000 in a day, guess what? There's a chance you're going to lose that in a day. And so, right. Yeah. That head shake.
Yeah.
Can you handle that? Right. Yeah. It's nice to think, oh, I'm just going to go, make all the money in a day and just be happy all the time. Yeah. But can you endure those potential losses?
Yeah. You sent me that Instagram post the other day, and it basically said, can you conform yourself to take the emotions out of what you're doing and trust in your strategy or your purchase, right?
Yeah.
I can't. Even $100 on the line, I'm freaking out. I don't.
Well, so that's another thing if you're starting out is don't put any, and this is just what I learned, what was taught to me. Don't lose any money. Excuse me. Don't put any money in there that you can't afford not to lose. Right. And so I remember, this is kind of a hard lesson for me, but I was trying to do some like wheeling and dealing in real estate and buy some off the market properties. And I don't know if I shared this story, but long story short, I was like out late trying to wheel and deal with this guy. I gave him some earnest money, cash. He gave me a receipt, but he's like, it was out of town. And he's like, yeah, I'll go down in the title company in the morning and we'll get you, I'll send it. I'm calling him.
Sounds bad already.
And he says he's done it. And then like a little while goes on. Turns out the title company's running it. He never gave him the check, or I don't remember how it worked, but basically it ended up his ex-wife was suing him. And so he couldn't sell the house because she had a lien against it. And then the guy wouldn't give me my earnest money back. He's like, sorry, dude, I spent it. And I was just like,
no. You didn't have anything in writing or anything.
Well, I had it in writing.
Oh, you did?
Yeah, but it was, the earnest money that I gave him was not enough. It was like $500. Okay. Yeah. So it wasn't $5,000 or $10,000. But I was still so mad. Yeah. I was so mad. I was thinking about doing some things that were not legal. Okay. But I thought I could be pretty persuasive.
Oh, you can choke out the guy playing basketball, but you can't choke him out?
Well, that was in the heat of the moment. This was more premeditated. And then I came to my senses. I'm like, what are you doing, Alton? Just water under the bridge. And so, but I learned. See, the way I look at it is I paid $500 to learn that lesson. I mean, we've talked about these 100K student debts. Man, a $500 lesson like that. Yeah, I remember that. Yeah. Now I'm not going to make that mistake again. And, anyway.
But that's hard to, I don't know.
It's painful, man.
You're getting something, with the schooling. Yeah, it kind of burns you in the end, depending on how things play out and which path you go. But I mean, you're getting something in return right then and there. If you put 100,000 into stocks, I mean, to some, that's almost gambling at the same token, right?
Sure it is if you don't know what you're doing.
Yeah.
Yeah, you're a fool. You never traded before, and you're just going to think that you're going to be good at it and throw a bunch of money. Good luck.
Yeah.
I mean, you got to start small. I mean, everybody says, and that's what, like, we're talking about percentages, and your strategy, like we were talking, okay, so we're in COVID-19 land. All right. We had what everyone calls in the, that trades, they talk about these black swan events that they happen like clockwork on average. It's like every decade. Okay. So you had, in my lifetime, you had the 2000 .com bubble, right? So you say, oh, everybody's going to be a .com. And then market tanked. Okay. And then you move forward to 2008. What happened? Housing crisis. Market tanked. right? Then you keep going a little more, right? That was 2008. And I'm thinking, okay, 2017, 18, what's happening? Well, we had the tariffs with the China, and that kind of dinked the market a little bit. And then coronavirus comes out. It's just another black swan event. And then everything just 30, 40, I mean, depending on.
I think I have a sound effect for that one. Hold on. Oh, that's not it.
Nailed it. Yeah. So then the market drops a ton, and man, you got me with that sound effect. Threw me off.
I wonder if my daughter changed the color of the button. I have it lit as red. It was supposed to be the wah wah. There we go. But see, it's green. They colored it green.
They got you for sure. Man, let those kids in my office. So we had these black swan events, right? That come and they happen. Well, so now the market's down, and if you had that 100K in there invested, you're probably going to be down 30, 40% or whatever it is, right? But it's also the time to buy, right? Now everything's on sell. So I think that
it's like the real estate business, right?
Mm-hmm.
It's about to hit pretty hard, especially for commercial industry.
I mean, look, if 30 million people are out of a job and they can't afford their house anymore because they don't have savings, which I think the average saving is like $500. I don't know, it's something ridiculous. It's really sad.
Wow.
It's like not even a month. Do
you think even with the stimulus check?
Well, maybe, but
it all went to alcohol.
Yeah. So the thing is, though, you got to know a strategy, and you have to be prepared to. I mean, honestly, like you brought up the stimulus check. That's the way to use that stimulus check. It's free money. Now, if you're just can't afford it, well, but I'm saying take it. And multiply it, but don't just jump in there. Like, that's a bad idea, because when I was 19 or whatever, when I first started investing, I had no idea the multitudes of strategies that you could have, that you could utilize.
But seeing multiplying, when you say words like that, just like all these other YouTube videos, right away in my mind, I'm thinking, oh, I can double my money.
And you certainly can.
But I'm not going to be able to do that overnight. If I do, I got lucky.
Well, okay, right now, what were you were talking about stamps the other day, right? I'm not familiar with them. What did you see on stamps? What happened?
I mean, their stock has been rising, just constant rise.
So you saw the stamp stock and you thought, I should buy some stamps shares because the trend is up.
Yeah, I mean, right? There's a lot of people going downwards or staying even.
Mm-hmm.
Ford was one of them, right?
Yeah.
They're down at $5.
Yeah.
I'm kind of psyched about it, but at the same time, right now, I could buy stock in them, but I don't know when it's going up.
That's right. But that goes back to your strategy.
I'm kind of in that mind frame. I want to do like daily stuff, And
Sure.
one of the people I was watching, he does 30 minutes a day in the morning, right as soon as it opens, and he'll trade up to 5 stocks. Normally it's 3 to 5. And he tries to find someone that has this, what they call a 3-bar or a 4-bar.
Right.
And that's the strategy. And whether it's up or down, he lays it out. There's 4 options on it. And it's just buying and selling stocks. Long sell or short sell, I think is what proper terms are.
Yeah.
And I'm really interested in that.
John wants to be a pattern day trader. That's what he's saying. Which is fine. It's
right.
fine.
And then you scared me yesterday or today when you were just like, well, if you do that, you're going to get taxed at a different rate if you do so many a day or a week or what. I already forgot. But that kind of sucks. I think people need to know that before
there
they
are
get going.
Certainly tax law implications.
So what's those?
In this? Oh man, come on! I'm not a.
You are the accountant, not me.
Accountant, no. So, but here, this is the thing. There's definitely money to be made. you have to have a strategy and you have to know the implications of that strategy. What I didn't know when I was 19 is that you can make money when the market's going up, when it's going down, when it's going sideways. You can make money in all of those scenarios. You can make money on a day scale, or, you know, like you mentioned, Ford. Probably it's not going to go out of business. You know, I mean, we don't know, right? But hey, probably the U.S. government will just write them a big check. Right now, it's down, what is it, half or so from what, like...
Yeah, I think it was 10 or 11.
Yeah, it was like 10 or 11 in, say, January, February, and now it's at 5. So one would assume if you buy a bunch of shares at 5, eventually, maybe 6 months, you could double your money, right?
Yeah.
It would be some strategy. That is a strategy, right? We could also talk about the dividends that good stocks pay, right? So if you own a certain amount of shares, every quarter, they're going to write you a check for the amount of profit that they make, or, you know, just basically paying the shareholders. And so that's another strategy, right? It's not going to make you money today, but then depending on, there's so many rules in the market, you have to understand what you're doing. Now, some people are what you're talking about, John, pattern day traders. They are in and out of trades during one day, right? They buy in the morning, sell 30 minutes later, they whatever, right? And they're doing that several times a day. And then you just get labeled as a pattern day trader. And that's where you have to pay the most amount of taxes, which I think, and I'm not up to date because that's not my strategy. I'm not like a full-time trader, but that's like 35%, you know?
So, but how do you stay out of that? Because like for me, right, I'm not going to sit here and do it every day of the week.
Mm-hmm.
I might have this week, you know, where I'm sitting around bored and I want to do it probably 2 or 3 days out of the week and then stop. Next week, I may only do one for the whole week. Am I still the day trader taxable?
You have to have rules. So I think it's 3 or 5 a week.
Is it an average based off of a month activity?
No, I think it's in a week. Like,
so if I do 3 this week, I'm going to get taxed that rate.
No, it might be if it's no. They'll freeze your account.
Really?
They'll be like, you're not a pattern day trader, you know? And they'll like say, cool your jets, buddy. And if you want to be a pattern day trader, you have to have 25,000 in your account. Now, if you have 25,000 and now you start doing it, you might get through that. They might just be like, fine.
Huh.
But it's still, you know, your taxes at the end of the year, that's how it'll go. But they say, I mean, and that should tell us all something. If they're forcing you to have 25K in your account to be a pattern day trader, they're saying you better know your stuff, or, you know.
Well, so my biggest thing with that is the videos I was watching of that guy, you know, his rule was, hey, it's great that you want to do this. It's going to take you 2-3 years before you're going to know it good enough to where you could do it for a living. But starting out, only expect to make maybe $10 on one transaction, right? But he's doing, you know, at times $1,000 in one transaction, but he's doing, you know, 500 shares of one stock.
He's scaled up.
Then, yeah.
Right,
and
sure.
it's amazing how much money he's making, but how am I starting out supposed to make any kind of money if my goal is only $10, but I'm going to be limited to these rules of, if you don't have 25,000 in your account, you can only do 1 to 2 trades a week. I'll never make anything.
Go find 25,000. Well, here's the deal. You got a paper trade. In other words, you have to set up an account. Like if you're serious about wanting to make money in the stock market, then you need to be getting serious about playing the game, right? If you're sitting there playing Xbox, you're watching TV, well, look, play the game, open, you know, a pretend account of 100K, you know, like almost all the trading software. I mean, there's anywhere you can search, you can do the paper trading, and there's even competitions. So you can, like, you know, John, you and I can open an account with 100K and say, whoever's got the most in 30 days wins. I mean, they're all on the internet, right? It gives you a little incentive, and now you can figure out how you're going to do these trades. And look, if you start out with 100K and you make it to 110K in 30 days, well, that tells you, hey, look, I'm 10% in a month. I like that, or I don't like that. Or you do 10% and your competition does 50 and you're like, whoa, I got something to learn here, right? or you end up with 50K at the end of that month and you go, oh, glad that wasn't mine. Glad it was monopoly money, right? Well, pretend money.
So let's give a good example. That E-Trade, if you do their power tool, their power E-Trading, they have a paper account that you can do, is what they call it, but it's only on their mobile app. You can't do it online because I got confused trying to find it. So, it's a good little fun tool like you're talking about, but they need to know where to find it, how to find it. So, this is just one option. I know it just because that's what I'm playing with right now. So that's a good example.
Yeah. I mean, they're all over the place. And that's the thing, like back to my martial arts analogy, like if you wanted to go fight somebody in the cage, you're just going to like walk in there and think you're going to win. You're a fool if you think that that's going to happen, not against someone who's been training. If you want to know how that looks, like just YouTube, tough guys, right? Like it doesn't.
Jiu-jitsu versus street fighting.
I mean, yeah, it just doesn't work against a trained opponent. So my big deal is that you need to be reading, researching, I mean, there's like I don't know if they're that popular anymore, but the books for dummies, trading for dummies. It's kind of like a Cliff Notes thing, but kind of gives you these deals. I mean, even Tony Robbins wrote like
those books.
600. Well, we've got YouTube now, right? But Tony Robbins wrote a 650-page book about these nuances of like investment companies, and the difference between your broker, like, and the laws that these brokers are essentially. A broker can just take your money and put it into stuff that he's getting kickbacks for and incentivized to put it in. And by law, there's no obligation for him to try to do well with your money. And so, I mean, Tony Robbins is so fired up about that. He wrote the 650-page book, but like, you guys need to understand this. When you just write checks to brokers, and I'm not saying bad things about brokers. I'm just saying that I think that there's a lot of people that look at their 401ks, their IRAs, and, oh, look, I got 6% last year. And they're like, but if I had it in a savings account, I would have gotten 0.01. Man, I'm winning. And then it's like, well, that the market did 10% last year, right? And your 401k did 6%. So what happened?
Wow.
That tells me your broker, your guy, your whatever isn't even they're not even, meeting the market, which is sad. But people, myself included, at one point I was like, oh yeah, it's just great. Right. And so those are things that I think you need to be researching on and understanding that maybe there's good people out there that can invest your money and do well, right? But I don't know. That one's hard for me to let go of my own finances, but I think that that's another thing that people are like, they don't want that responsibility for themselves. So
another thing that surprised me recently is back in the day, I used to want to do stocks. So I opened up, I think E-Trade or Charles Schwab or something like that back in the day.
Mm-hmm.
And I attempted to do something similar. I didn't put hardly any, like $50 just to see how broke I can go really quick. And the fees that they used to have were ridiculous. I mean, it was something like $3 per transaction. So to buy it, it costs $3.
Oh, yeah.
To sell it, it's another $3. And when all you have in there is $50 to $100, you're like, no, I don't think so.
Yeah.
But apparently they've got things like Robinhood that just came out not too long ago, and they don't have fees.
Yeah.
They make their money other ways, which has changed Charles Schwab, E-Trade, and several other big guys.
Oh yeah.
So
Yeah,
now there's
it's
competition. Now they've got to
competition.
drop the pricing. So there's virtually no fees that way. They have to find there are other ways to make the money.
Yeah. Yeah. Especially in option trading. I know that the fees are really, really minuscule, which ends up being okay for us, right?
They're only like
you said,
$1.30 or something like
yeah,
that now, right?
it's really, I mean, in an option contract, you're buying 100 shares of whatever, right? So if you're buying one option contract and the share price is $10, you know, there's like 100 or there's $1,000 into that trade. So a couple bucks is not a lot to have to worry about in there.
So, you know, when someone like me is starting out, you've been doing this for I think a few months now,
So
and you actually invested money into this.
yeah, well, so I've figured out I'm kind of a clever guy. I've had a lot of dumb ideas, but as I've gotten older, I've realized that I like shortcuts and I'm kind of lazy. And as clever as I am, I've messed up a lot of things, right? So, as and I also don't like school. So I'm not a big go to school, sit and like be told what to do guy. I kind of struggle with that. Having said all that, look, I think in our culture, we've got this idea that we need to go to school and get wise. But, you know, for thousands of years, it's been find a mentor, be an apprentice. That's kind of how the game has been played. So there was this kind of serendipitous thing that happened to me. I like going to these little wealth building seminar things. You know, they'll say, hey, come to our free seminar, you get free tickets. And basically what it is we're going to give you some nice little nuggets. It's a nice networking event. And then there's going to be a big upsell, because if they're giving that to you for free, you know, they got to make their money somehow. Right. And
Right.
I've
They're
been
reeling you in.
yeah, one of these. I went to one of these with what was it, Robert? One of these Shark Tank guys here in Austin.
Mr. Wonderful.
No, Robert, the like Polish guy or whatever.
Okay.
I can't say it's like Hirschevak or anyway. I went there as a free deal, and then they, you know, they just try to upsell you on these things. So anyway, I went to one of these real estate deals because I like real estate. I like learning about it, and they give you these strategies, and then they say buy our mentoring program, right? 10K. We'll teach you how to flip houses. I think it's great if you're ready to go and do that, but I'm not ready to, you know, shut down my business to go and flip houses. But they had this stock trading deal, and I was like, oh, that sounds cool. I'll go do that. You know, so I signed up for it. It was great. And then I bought the up package, you know, so they upsold me. It was like 5X what the original one cost. I paid for that. And it's like a 2 or 3 day deal. And I felt like he showed me some really solid strategies. I'm like, oh man, this is cool. So I had my paper trading account, and then I had a little bit of money in my E-Trade account. So I was doing paper trades and and then doing some real trades. And
So
it's
you
just
jumped right
working.
in.
Yeah. I mean, this is something that I've wanted to do for a long time, and I've lost a lot of money doing a lot of other ways. But then I proved, like, doing this paper trading thing, it's totally systematized, and it's a way that works within my risk tolerance and the way that kind of my mentor was teaching it really resonated with me. It sounded good. It was easy to understand and digest. And when you start talking about options, people's heads start spinning around. You got puts and calls and buy and sell and contracts and in the money, at the money, out of the money. And, you know, it's like, what? You know, you got to even learn the jargon before you can actually learn the strategy.
Oh, and then they have strategies to back up your strategy if it goes south.
Yeah. And
when there was one, it was like an 84 splitter. I'm like, oh,
yeah,
man,
all of these
you
little
lost me.
clever things, and they're not applicable to everyone. So some people like to trade the SPY, which is the index fund.
Uh-huh.
But I think right now, I don't know what it's at today, but it's almost $300, 250 to 300. You know, so per contract, right? You're looking at a lot of money. It's just to play the game, right? And
Or it
so
can be
not
like
every
me, just buy one.
well, yeah, one share, right? Not even one contract. So so the point being, not all the strategies work for everybody. So you got to find the strategy that you like and that works for you. And that's why what I'm trying to say is you need to find a mentor. And I think it's, looking back on my life, it's kind of foolish for me to just jump in and try to figure it out on my own when you're not comfortable losing money.
Yeah.
Well, I had to get comfortable losing money because that's what I did. Although I was in a stock purchase program, which was nice because the company was actually paying a lot of, the way it worked was, you just basically gave them some of your money out of your check, and then they'll buy the stock for you, but they'll buy the stock at whatever the lowest price of that quarter was minus 15%. So you're like almost guaranteed a 20% bump immediately, right? So when you want to talk about going to work for somebody, if they've got a stock purchase program, you can really, really do well. So my deal is like, you got to be educating yourself, and you got to be learning a strategy that works for you. I found my best way to shortcut that is to pay someone who's already doing it, who's already making money, and is willing to take on students.
So that class you went to, was it really good? Did you learn a lot, or did you just feel like you were overwhelmed? You couldn't remember anything, or you couldn't focus because they lost you with all the jargon?
It was a bit of a challenge when you're first exposed to all that. I was in a class of maybe 25, and certainly there were some people that were walking out. They were like, whoa, this is not for me.
Wow.
And I'm like, man, you paid a lot of money to walk out of this class. But they just, I don't know. They thought, they dreamed, oh, I'm going to make all this money. And then they walked in there and they were like, this is not for me. Having said that, I love, as an engineer, I was always looking at charts, data, graphs.
Yeah.
Even in marketing, I'm looking at analytics and I'm analyzing, what does this mean? Why do we have a little uptick here? Why did it go down here? What does that mean? I had to interpret that for my clients. In engineering, I had to interpret, well, here's all this data. What does that mean for us? What action should we take because of this? When the line stops, which direction is it heading? Not right. So for me, looking at these charts, analyzing it, it was easier for me to want to learn and to like it. I'm used to looking at all these charts. If you're not, and that's not really your thing, then maybe it's not for you. But I will say that there were young, old, male, female. It doesn't matter, what color there are people in there that are doing it. And I have a networking group, that went to the same class, and we kind of get on text, right? And they're of all sorts. So, it's, you just got to get in there, and you got to want to do it and really dive in. 'Cause I don't think that it's a good thing to just, oh, I heard Alton say he can make money in the stock market. I'll go make my deposit and make a lot of money. Well, good luck.
Well, so, one of the things we talked about beforehand, before we started the show today, and it kind of caught my attention, is a way to get some money to start the stocks is you can either leave it sitting in your 401k to earn it by somebody else playing with your money, or apparently you can bring in your own 401k to play with yourself. Is that right?
Oh, for sure. Yeah, that's another little, I want to do another little plug, definitely for the stock market. You can do it. It's your money, right? Now, the issue comes when you go to withdraw, right? And that's when you get some tax implications, but it's your money.
So you can transfer it in for free, but you can't withdraw it and put it into your bank account without taxations.
It depends on how it's set up, right? Like, and I may be getting this a little wrong with the specifics.
Sure.
So you can have a 401k retirement plan, and you can have IRAs. You can have a self-directed IRA, right? You can have a rollover 401k into IRA. You probably know more about the like book side of this. What I do know is that if you have a retirement account, there is a way that you can utilize that, and you may have to like roll over into another one, right? It's like paperwork deal. But I'm a big like buying physical metal, right? Like buying gold, buying silver. And you can even do that in your retirement account. Like you can buy gold from these places, and then you have to have the gold shipped to another place where you can't actually touch it, but it's yours and it's in a safe and it's your retirement, unless you want to sell it, and then there's tax implications. But I'm just saying that because there's a lot of things that you can do with your 401k, and I'm using 401k loosely, your IRA, your retirement account. Basically what that means is that that's sheltered from taxes, right? It's either pre-tax, post-tax, but it's for retirement. So you can't withdraw until you're a certain age without penalty. So
now the trading the metals is another portion of stock trading, right? You have to sign up for.
Well, I'm talking about just buying physical gold and silver with your retirement money.
Oh, okay.
What I was trying to say is that you can do a lot with your retirement accounts that many people are unaware of. Now you may have to move things around. I mean, you can borrow again. You can buy real estate with your retirement accounts, like tax-free. And I mean, there's a lot of little things you can do if you have the right strategy. Step one is being aware of the strategy, that it's possible. And then number two is like learning from someone who's done it and and then implementing it. So you can certainly do that, and that's a great way to build up your retirement account. And then, but I know some people, they trade in their IRA, their retirement account, and then they have their cash account, right, for now. And so they have these two accounts. One's for now, these income strategies. It's like, oh man, Royal Caribbean, it's down, 65%. I'm going to buy. And it's tax protected. So, like with your strategy, right? Oh, I'm not going to retire for 10, 20, whatever it is, right? Like, yeah, that's good for that account, but maybe like it's not going to pay off, like you said, in 1 month. So you have to have a different strategy for this month.
Yeah, there's a lot of strategies. In fact, I think the biggest problem really is there's so many of them. You really got to find something you like, because me and you had an in-depth conversation the other day about selling puts, I believe is what it was. Mm-hmm. And to me, it sounds like a win-win, right? Either you lose and you end up with the stock, but if you're okay buying that stock
for sure, because
you think we'll take Ford, for example, right?
Mm-hmm. Yeah.
Long term, obviously, we feel like it's going to go back up because we like Ford. But you're selling your put, offering somebody a stop point in case it goes too low, right? Mm-hmm. Am I on track on?
Yeah. Okay. I mean, if you don't know anything about option trading, just real quick, if you've never heard of it, don't know what it means, essentially, it is for people who own shares, they can buy options. What that means is that it's either insurance, right? Like to sell it if it goes too far in one direction, or it's a coupon to buy it at a discount if it goes in some direction. Yeah. So it's not a share, but it's either a coupon or insurance for those shares. So, John, when you're talking about selling a put, he's talking about selling someone a contract for insurance, saying if it goes below this price, I will buy it from you for that price.
Right. And to me, that was kind of one of those things where it was like a win-win. But then, it comes down to, okay, I personally can get maybe two contracts of that, right? Yeah. And that's nothing, because I think when we were talking about it, you could only make off of 2 contracts $7 for the put option that we were talking about at that moment.
Yeah.
And $7 off of $1,000, that's nothing. I'm never going to double my money for quite some time.
Well, I mean,
Of course, yes, there's other contracts you can get with other companies, but it was like, I'm too new at this.
Yeah.
You know, I'm not the white belt. I'm the kid in the crowd that you use as an example on a chokehold.
Yeah. Yeah. I mean, so that's the thing though, right? Is when you start just browsing YouTube, you don't even know what's important. So this would be my advice. So someone's sitting there like, I've never traded the stock market. Maybe I can make a lot of money. And John, you and I mentioned as a secondary strategy, you know, and we've talked about starting a business under this COVID-19 craziness, saying, hey, I need another leg, another vertical in case, you know, it's insurance in my own life. Hey, if my boss is going to let me go, or there's going to be this black swan event, and now I don't have my way to earn, do I have a side gig, a side hustle, this secondary income that I can dial up when I need to, or, you know, pad the savings, even if that's kind of the thing, right? To where you've at least boosted your savings. And now when these stocks are down, you can, boom, scoop some up at a discount. And then you get your job, right? You got the offer, John, but man, you had that savings to capitalize on this time. So I'd say, you know, jump in, follow some people on YouTube, on Instagram, Facebook, whatever it is, you know, join these groups. It's the people. The people are going to give you the answers. And with stock trading, the thing that I love about it is, like, we're not in competition. You and I can trade the same stock and we can both make money together. It doesn't.
It's not like fishing. I don't have to worry about giving you my spot because you're not going to go take my fish.
Exactly. Right. Like, hey, let's copy off of each other's paper and let's make a bunch of money together. No traders are in competition with each other. We're all here, right? We're all here for the same reason. Invest in companies, provide insurance services, give coupons, incentive, like all of these things, right? So yeah, I that's certainly a thing that I really love about the market, is that it really brings people together, and that we can navigate through this together. We can all cheat off of each other's paper, and let's figure out, hey, if I got a good buy right now, this is a good buy. Let's buy. Hey, if we think, you know, it's not good, then I need to let you know, man, I wouldn't do it. But hey, if you're ready to take on that risk, go ahead. Like, I'm not though, right?
So then what's our deciding factor for today?
Well, I mean, I think we should talk about whether or not you should do it, whether or not you should be in the market, because I think I've been on both sides of the fence.
So stocks, good or bad, now or later?
Yeah,
is the question, right?
Yeah, sounds good.
He's hesitant, huh?
No, I like it. I was thinking about the later comment that you said. I'm like, no, now.
All right, here we go.
Now it's time for our deciding factor.
All right. So are we doing the stock market? Are we trading stocks? Are we in there doing stuff? When there was a long time that I thought stock trading was a good idea. I lost a bunch of money and it hurt my feelings. And then I was very anti stock market, stock trading, really thought that there was a lot of gambling involved. I still believe that you can certainly gamble in the market, right? But for me, I'm trading in the market. So for me, my deciding factor is like, yes, it's definitely a viable option to make money. See what I did there? Option. All right. Dad jokes. It's certainly a way to make money. I don't believe it's gambling if you have a strategy. If you're just hoping, you don't have a strategy and you're gambling. But for me, what I just said, and that we're all in this together and that we can all win at this, I love that. And I love that it brings people together. And I love that stock market trading is scalable. So yeah, it hurts when you got $100 in the market and that's all you have, and you can buy one share of one stock, right? And you're like, ugh. But you know what? If you can find a strategy to make some percentage, whatever that is. If it's 3% a day, 3% a week, 3% a month. Look, if you make 3% a month, 3 times 12 is 36. Is that right? That's 36% a year. So if you start with 1,000 in there, at the end of the year, you'll have 1,360. You think, well, maybe it wasn't that good, but that's 36%. So you got to figure out a way to get up to 10,000, right? Now you made more, and 36% is way better than anything you're going to make in so many other investments. So it's super scalable. And then boom, if you learn what you're doing, you can make way more than 36% a year. These day traders are, there's strategies to make 3 to 5% a week, right? And those are the strategies that I'm working on, and it's totally scalable. So 3% of 1,000, 3% of 10,000, 3% of 1,000,000, totally scalable. And you just have to learn the skill set. So I say, go find a mentor, learn a skill, that strategy, network with people, and don't invest what you can't afford to lose.
So you're all in, and it's now, not later.
Well, look, if you get in now, there are so many quality stocks that are on sale. Royal Caribbean, Ford. I mean, just go look. AT&T, all of these companies. You think AT&T is going out of business? I don't think so. You can get a 30% discount right now on their stocks, and they pay dividends. So, if you wait, that sale price goes away.
So someone that doesn't know dividends, what's the dividend mean to them?
It means that however many shares you have, every quarter, a company says, hey, I've made X amount of dollars, or I've lost. This last earnings season was a lot of losers, right? But yeah, so dividends are they're paying you some amount based on the amount of shares that you have, right? You are an owner in that company. So like with kids, it's a great way to teach kids. Hey, you like Disney? You like Mickey Mouse? Let's go invest in that company, right?
Yeah.
Let's go. We own Disney. You are an owner of Disney. Like, hey, this is a great concept, right? And guess what? Disney's paying you because you're a business owner, right? Like, maybe that's a little bit of a stretch but you got to get the kids excited about it. And, most of us are paying Disney, not the other way around.
I still want to go. Bad. It's been a while. But, so for me, oh man, there's a lot to say about this topic, and I don't think we have enough time. But I'm definitely for it. I think I have a lot of reservations about it still, just because I know there's way too much to it. And like I said, I'm not even a white belt at this point, I don't feel. And there's just way too many ways that you can lose all your money and never really did anything. So it's definitely getting with the right people, learning what to do. One of the videos that I read or saw, I hope I didn't read the video, but
hey, subtitles, come on.
But, back to that one with the 3-bar and the 4-bar. One of the things he says is, you cannot get into this thinking you're going to do this for a living. It's going to take you 1 to 3 years. You're not going to do this starting tomorrow. And you got to start small. $10 is what you plan to make in your first year on every transaction you do.
Yeah.
But the biggest problem biggest point he made, as well as a few other videos I made, is if you cannot replicate it, if you cannot describe every move you make to someone else and that they could maybe verify, you don't have a strategy. You need to start over.
Yeah.
Right?
Yeah.
So I'm still at that point where I've seen his videos. I still don't think I can replicate it totally, but I see it when I've been watching the stocks every day. I'm like, oh, there it is.
Yeah.
But
yeah.
I still cannot replicate it. Here's the other point he makes. He's a realist. So He tells you you're going to make 3 to 5 trades in your day. You're going to win 3, lose 2. That's your goal. You are going to lose, but we're not going to lose much. Our wins are going to be more than our losses. And I even remembered watching one of his videos. He lost all 4 accounts that he did that day.
It's a bad day.
It's a bad day. But then he turns around and he'll have several days where, I mean, his transactions, $500 to, $1,500.
Mm-hmm. Yeah.
And it's just ridiculous the amount of money he can make. And even his losses aren't that bad because they have those options to where it's like you've got these stop limits.
Yeah.
To where he'll set it for a few cents, like say 30 cents.
Mm-hmm.
And he only goes up $1 to $2.
Yeah.
So his ranges are very narrow. So he's controlling it
For sure.
very good.
Yeah. Yeah.
So
He's got a strategy.
Yeah.
Right? And it's consistent.
it's consistent and he teaches it.
Yeah.
And he can show you, he can prove this over and over. If you can't do it, don't quit your day job. Don't move on. Now, as far as when to get in, I would say now I'm doing it. I'm not great at it. I'm not doing a lot of it. I'm doing something. I'm starting my learning process now.
Yeah.
It's like the college thing we talked about. I can learn it. I don't have to pay for it. If I do, it's my losses.
Yeah. Yeah. Well, you may have to learn some, but I think, to your point, I would look at, if you go to a city and you look at the big buildings, they're either owned by banks or they're owned by insurance companies. Okay. Trading in the stock market, it's the same deal. You're either being the bank, right? You're lending your money to businesses to get a return, or when you're doing option contracts, you're doing the insurance. Guess what? Insurance companies have to pay out claims, but go look at the buildings. Like, they're making money. They're ahead. But yeah, definitely plan as an insurance company to have to pay out some claims for sure.
Yeah. So I'm definitely in on, let's do this now, not later, because you need to start building now. And you can do it later, but why not start now? But definitely learn something.
For sure.
Anything else you want to add to this topic?
Thanks for listening.
That's it? That's all you got? Come on, give me something more.
Hey man, I love the stock market. It's fun.
Top shares to watch. Give me that.
Man, I'm liking Royal Caribbean and Ford right now for the long plays, but for the short stuff, you got to find the more volatile. Virgin Galactic's a good high volatility stock right now.
Really?
Mm-hmm. Yeah, the premiums are good on that.
Interesting.
Mm-hmm. Yes, if you like old Richard Branson, might check his out.
Nice. All right. Well, I guess that does it for us for today's show. Thanks for listening in. I'm sure we're going to have to talk more stocks later on. We're going to have to check in to see how broke I've become and how rich you've become.
Yeah, what color my Ferrari is.
Or how mad our wives are at us, right? See if any of us get divorced. Let's hope not. Let me add this. One thing I did like what you said, because there is strategy, we're both from the same church. It's not gambling because there is a strategy, which is something that I had to grip with because there's that really conservative side that's like, no, it's gambling.
I hear you, man. I hear you.
All right. Well, say bye.
Bye-bye.
This has been another episode of The Deciding Factor, giving you food for thought on real life issues. Be sure to click, like, and subscribe to this podcast, as well as all your big social media outlets, Facebook, YouTube, and Instagram. Don't forget to check out our website at thedecidingfactorpodcast.com and give us comments and feedback. Until next time, stay safe and remember to keep an open mind.